I now want to sort of move on to a bit of a different topic. And I've had the pleasure of knowing Shaun for over 2 decades now, about 21 years. It's like a 21st birthday. So I'd like to invite Shaun Gregorio up on stage, who's the founder and CEO of Frontier Digital Ventures.
Thank you, Simon.
Thank you, Shaun, for joining us again.
I was going to say, here we are again.
We are again. And what I love doing about these conversations is almost like seeing progress over time, sort of a check-in. Okay. And where I want to start is let's get the audience up to speed on what Frontier does, the markets you operate in, and then we can talk about the opportunities, the challenges, the headaches it's taken to get there, and then where we go in the future, or where you go in the future.
So we focus on emerging markets. We are probably most significant now in Latin America. So we're in about a dozen countries there with 4 businesses, which is now run by Ricardo, who many of you would know from Infocasas. We have some businesses in developing parts of Asia and some businesses across MENA. So our focus is property portals, and we do a little bit of automotive as well, and we actually do some general classifieds on top of that. Our model was pretty straightforward. We used to try and run emerging markets from 40,000 feet, and it's really hard. And we sort of had this epiphany where we found out that founders are really good at running local businesses. So we would invest in founders and then work with the founders over time. And then progressively, if the business was going well, we would acquire more of it. So we now have 15 businesses in our portfolio. I think we own 100% of 7 of them, of half of them. I think we're up over 50% of all but 2 now. So of our portfolio, there's only 2 that were in a minority position. So when we first started, we only had minority positions, around 30%. But over time, which is a few years now, we've gone to 100%. So we've gone from being investors, like a active VC of sorts, to being operators of portals. So we've come, let's say, full circle, 180. To being operators now.
Yeah. So when you think that raises an interesting question, right? Where's head office?
Well, this is a good question. It's in KL in Malaysia, and we don't do any business in Malaysia. Okay. So we base ourselves there. And there's a range of reasons we do that for. But you've got KL here. Latin America is 12 hours difference and another language. The Asia businesses are obviously in our sort of hitting zone, and the MENA ones again are sort of 6 hours, I think, the other way, and French Arabic. So, yeah, we've got most of the world covered.
So, but what's interesting is when you're an investor, you can be a little hands off. You can cope with the 12-hour time zone differences. It doesn't really matter. You can check in every so often. Now you've got sort of 100% ownership, and you are the owner, the operator, the boss, and you've got people operating in Latin America and so on. How do you actually make that occur and sleep?
Yeah, it's careful what you wish for, I think, in these instances. So I think when we started out investing, it was really good because the founders run the companies, they're very passionate, they're hands-on, they're 24/7, and you can not relax, but it's in good hands. As you move to wholly owned companies, it corporatizes a bit, and that was evident in some of the businesses we had. So our plan was always to, and if I use Latin America as an example, we owned 50% up to 100%, was to essentially then have someone local run it. So last year we appointed Ricardo, who'd been running Infocasas for us. So he's now CEO of the LatAm businesses. And the reason we like Ricardo is he's a founder. So he has that drive, he has that passion. So there was probably a period when you own minorities that you can kind of sleep semi-comfortably. You get up to 100 and all of the wonderful things that come with operating these businesses re-emerge, and we had that for like a 12-month period. It's really hard, and it was really clear to us that the value of having local folks run the businesses was imperative.
So let's dig in a bit about these challenges of building these businesses, and let's start with the challenges of how do you think about, and let's just focus on the property side. Let's not worry about the other businesses. Do you see, when you think about building a business in Panama versus Uruguay versus
Morocco,
do you see similarities, the model that you can move between them, or are they fundamentally approaching the markets in different ways? Are some transaction-based? Because Infocasas is transaction-based, of course, and then you've got some which are probably just pure classified. How do you get the cross learnings, or you're sitting there having to segment your brain into different markets, different models, and Are you losing opportunities in that process?
Oh, look, inevitably there's slippage just because there's so much happening. Like when you've got 15 companies, 1,000 employees across, however many time zones, it's inevitable. But I think that the flip to that is, if you look at property portals, the search and discover part of the process is almost generic. Anywhere you go, the search and discover piece hasn't changed that much. Under the hood, maybe. And it's interesting when you go down the transaction path, it starts to become far more local. And if you think about two countries that are really similar, the US, Canada, England, Ireland, Australia, New Zealand, your search and discover is exactly the same. But when you go to buy the property, it differs a lot and it becomes very local. And I think in our businesses, we were able to scale and move information and knowledge around based on the search and discovery process. But when you get down the transaction path, it's where it really diverges. If I use LATAM as an example, the guys at Infocasters are doing some really neat things using tech. They've got chatbots. I think you know about this product, right? Where they recycle leads, they use chatbots, they use AI. We have an investment in Pakistan that doesn't use much tech at all, but is trying to do the same thing. And if we think about the experience we've had in LATAM with Infocasters, we're trying to pick that up and now drop that into the other LATAM markets. It'd be a stretch to try and drop that into Morocco or Philippines or anywhere else, but we know that the local way of buying property in Uruguay is still different from the other LATAM markets, but it's more similar than anything else we can find. So when you go down the transaction path, it gets much harder, but we're pursuing it and everyone's pursuing it because of the value that's there. And in emerging markets, and I'll probably skip ahead a question here, making money off ads is hard, and it's going to get harder, and arguably that classifieds piece is at its apex now. And if you don't go after other revenue streams, you're not going to have much of a business. So as hard as it is, as difficult as it is, and it's a fundamentally different pursuit for these businesses, you got to get there. Question is how and what it looks like locally. That's the challenge.
So let's dig into that a bit deeper, right? We're here. So if we go back and have a conversation in 2001, 2, or 3, and at REA, and it's literally sell ads.
Yeah.
How do you and increase ARPA, put the price up, try to get dominance, roll out some more advertising products. Today, when what we're hearing, like most of what we're hearing, and it's interesting, I was reflecting before, we reflect on what Scott was talking about or Christoph was talking about, it's about optimizing the current marketing model, right? And getting, really starting to squeeze that to get the most value out of it. Yet you go to the emerging markets and where you guys are operating, and no one's talking about portals anymore. It's all about transactions.
Yep.
How easy is it for you to move each of these markets into that transaction stream?
It's not easy at all. It looks easy, and fundamentally, running a property portal looks easy, and we probably make it difficult because we think of things to worry about. It's actually a pretty straightforward business model, and it works really well. Transactions is infinitely more difficult. And if you think about it, the way you purchase a property hasn't really changed that much over a long period of time. We bought a house a couple of years ago. I did all the research online, but the purchase piece, I did it as I would have maybe 20 years ago. So it's very, very difficult because you're changing a mindset. You've got the challenge of, am I disrupting my own customer base? Therefore, where do I go to do it? Getting paid is a challenge with the transaction model because it tends to lag. There's a whole lot of reasons why you shouldn't do it. But the fundamental problem you have in emerging markets is that the economics of ads is not compelling enough over the journey. And the economics of the transaction are so compelling to the point where in most emerging markets, certainly in our markets, if I were to compare ourselves to REA, for example, they're thinking about ways to make money off mortgages, off, legals, off conveyancing, every single step you take to purchase. In emerging markets, we think about those things as well, but we don't think about making money from them.
No,
we think about them
to an end.
as enablers to the purchase. So if someone says, can you get me a loan? I'll say, fine, Mr. Bank, help this guy. What else do we need to do so you can purchase that house?
Yeah.
And we don't worry about making money off the loan because the economics of the transaction is so compelling, and that's what everyone's focused on. So it's a really interesting journey. It's very different market to market. The guys in Pakistan, for example, they're getting paid 10%, 11% now on a transaction from the developer. In some of our markets, it's 1.5%. And
offer lower value as well, I guess.
Well, even if it's off the same value, it's literally a tenth.
Yep.
So you think, oh, is that enough to make it compelling? What else can I do? And the model then sort of morphs, and we're trying to get ad dollars as part of that commission, and which means when market to market, you really do have to think through what's the local solution, because as I said earlier, the local way of purchasing is just very different in each country.
Okay. So it does raise the challenge. If running a portal comparatively to a transaction business is relatively easy, right? It generates
Yes.
traffic,
Yes, remember the days.
sell the leads, yes. Finding really good people
Yes.
who understand this in each of the markets must be a big headache.
Well, you've literally had tens of thousands of people around real estate transactions in a given market. The volume of agents, developers, everyone understands how the process works. No one's ever aced it on how to, I don't know, let's say digitize it or,
Yep.
or make it part of the portal DNA. And it's even more interesting when you look at the examples that Malcolm had yesterday. There's been, I'd venture to say now, billions of dollars thrown at this problem.
Oh, yeah.
And even the gorillas in the room, the Zillows of the world, kind of go, oops, not for us. So it's not easy. And if you think about the amount of effort, the volume of people that are around this, but very few people have cracked it, and you distill that down to emerging markets, and it's a learned experience. It's a lived experience where probably the guys running the portals are as well equipped as anyone to say, well, how do we take this next step? Logic says, go get people from the industry. Maybe go get people from e-commerce environments, whether it's an Amazon or eBay. But in most instances, you're dealing with high volume, low value goods, which are easily either transported or kept on the shelf, or it's not a 180-day sales process. You think about, and we'll just stay on houses. I was going to say cars as well, but houses are a one-off, the highest value purchase item that a consumer ever makes, and we're trying to make it like it's Amazon. So there's a contradiction in behaviour, and it's why I think the purchasing process hasn't changed a lot, because I'm not doing it that often, so it's not a repeat behaviour.
Yeah, I think I remember having a conversation with Ricardo somewhere along the way, and we were talking about, as you move into the transaction business, it's the real need to have that constant try, fail, learn, retry, fail, learn mentality built into the business.
And I think it's one area that founders do well. They're willing to fail. When you own 100% of a company and you're running it in a corporate sense, people don't like failing because it's their bonus. So it's like, well, do I have to do that? Well, yeah, you do actually. And I guess it's trying to marry up that ambition around being innovative and willing to try and fail with a nervousness about it not working. But in the back of your mind, you go, I have to figure it out. So
Yes.
I'm probably going to have to try. And it's interesting you touch on that point, and it's something that we really try and instill in all of our companies is just try. And everyone sits there and goes, oh, I want to do it. Sort of like push them. And if they fall on their face, so be it. You get up and you try another model. But we're going to have to figure it out. And it won't be the same everywhere. And the margins will be different. But when you crack the code, not many have, when you crack the code, the market just opens up. And a lot of the better businesses that have gone from begging developers for projects to now selecting the projects and a very specific type of project. So Infocasas, for example, their sweet spot is inner urban, 5 to 8 story, 900 to 1,500 square feet, 2-bedroom, new build apartments.
Yes.
That's
It's
what
very,
they sell.
very specific.
Very specific, but there's a fair pipe of them, and they don't need to do, it's not like classifieds, right? You don't need 90% of the market.
No.
You need
5%.
a sweet spot, right, that
Yeah.
you can shift.
Yeah. And it's if you can dominate that segment, you can then become a profitable business.
Absolutely.
How do you think about the economics of these transaction-based businesses? You've got the revenues driven by commission. How much should be spent on commission to commission salespeople, and how much should then go as a sort of gross margin and hopefully EBITDA? Long term, how do you think about it?
It's good because there's two things I'll say. That the events of the last 3 years when capital was free, unit economics became this mystique that people spoke about and probably didn't fully understand because I could spend my way to something.
Yes.
And a lot of these businesses didn't work. So you hold that thought. You think about the traditional agency model and not what Georg's doing, but what a typical high street office would do. 10% margin? If that, 8%.
Yeah.
So you're trying to take a really big economic opportunity of which the experts are making 8% at. You're trying to take your portal, which theoretically should have 30, 40, 50% margins. So the way we view it is you're trying to take a really inefficient industry that doesn't know how to make money. You're taking the DNA of a business that does know how to make money and finding the sweet spot in between.
Yep.
So you want to take a big economic opportunity that's low margin with a business that really knows how to be efficient and meet in the middle somewhere. So, when you think about margin, it's probably somewhere between 8, which is the average agency margin, and 40 to 50, which might be a portal margin. And we're finding that it is right about that point, that sort of 25 to 30% at the moment. If you've got good systems and processes and you've got good throughput and you know what you're doing and you've failed a couple of times and you're on your way.
And you've got scale.
You need scale. And this is where the market leadership piece comes into play. And I mean, you and I have spoken about this many times, but the value of being a market leader when you're trying to do transactions, I think is super critical. Your brand, traffic, buying traffic if you're starting out. And we're seeing a lot of businesses have come into the market the last few years from nowhere and had to buy a ton of traffic. The unit economics go out the window. If you're a leader, you've got organic traffic. That's such a wonderful starting point. And in emerging markets, particularly, trust. And your brand is number one. People trust you. They want to stick around. They want to do more. So all of those things that worked for classifieds, really important as a foundation, if in our view, if you want to move toward transactions.
Okay. Can we bring up the questions just so we've got them here, because I know there's a few who have materialised. I want to touch on they'll pop up on the screen here in a sec. I would like to touch on another issue. Being a listed company.
Oh, that's where I was last night. I was doing our full year results came out on Tuesday, so I was on conference calls to US investors, which is why I didn't join you for a bit.
Right. So let's talk about the opportunities and challenges of being listed. Okay. Andy Sheets always turns up. Sorry, inside joke.
Funny.
Let's talk about. So you listed what, 6 years ago, maybe?
Yep.
More or less.
Yeah.
Now, when you listed, what was the reason for listing?
So a lot of companies think about listing as a destination. We saw it as a beginning, and it was really to do two fundamental things: raise money, which was fast and easy, but also we were investing in companies that were in far-flung places that a lot of people didn't understand, and we thought the gold standard in terms of governance, in terms of transparency, in terms of trust, was to have a gold standard structure, which is a listed company rules and regs. So people could look at us and they can see everything. We have to report everything every quarter, much to the chagrin of some of our portfolio companies, but we're very transparent. We can't lie. We're audited every 6 months. It's the gold standard in how you would want to structure, in our view, a riskier pursuit.
Yeah, and a great way to raise money.
Great way to raise money.
To start initially. Now,
when things are good.
Here we are, 6 years later. Probably February last year was a very fantastic point. If you could sell all your shares then.
If you could.
Right, and then you're here today. I mean, I think a good example is someone like a Kazoo.
Yep.
Right, who, for those who don't know, they did a SPAC, which is a separate issue altogether, $10 SPAC listed, basically at 27 cents today, right? And that's been the last, 18 months? I would
Terrible.
Think, right? To lose 98% of your value in that period of time. So the markets have changed.
Yeah.
Okay. How's that impact the way you think about being listed? Headaches, opportunities?
Look, people say, "Oh, don't worry about the share price," which is easy to say if you're not running a listed company with a share price. I say, "Oh, don't look at the share price." I go, "Well, what do I do each morning?" You've got to put that out of your head and try and fundamentally run a good business. And if you believe that, you'll have loyal investors who will follow you and help you and invest in you. I guess the issue with a SPAC was that was the destination. Like, you list in a SPAC and we're done. It's really only just beginning. And I think anyone who's thinking about listing, I would say listing your business think of it as the beginning, not the end. It's the beginning of a longer journey with a whole lot more things to worry about. But the upside is you've got great access to capital. Your business will be considered, I guess, a gold standard in terms of governance and auditing and structuring. And it opens up a whole world of opportunity. So I spent most of last night on the phone to US investors, just getting them comfortable with what we were doing and talking to them about the opportunities. And they understand the business. So, you get to open up a wide range of people you get to engage with and learn from. and I've learnt a lot from our investors. Yeah, it's arguably something that is an added factor just to running the business, of course. But I think the upside is you can grow fast, you've got access to capital, and you're a gold standard in terms of structuring.
Makes sense. Let's answer some of these questions. Are you going to merge all your assets into one, and this is a technology question, into one cross-regional tech platform?
No.
Okay, that answers that question. Why not?
The benefit is probably not worth the ask, in
Yep.
that what we do is we try and homogenize or make similar a lot of the add-ons, what you're doing, whether it's analytics or different APIs, your plugins and so forth, lead management. The fundamental structure of the platforms is still, in our view, better served locally. You can still have, in LATAM now, we'll have one CTO looking at these 4 platforms. He's a smart guy, and the platforms are not that complicated. The benefit of recoding it all and rebasing everything, and we've bought a couple of businesses where we've had to migrate off an old tech stack onto a new one, and it's never easy, it's never fun, and it never works anywhere as fast or as well as you think. So maybe I've had bad experience.
Okay. No, I think everyone's had the same experience. I've never heard one good, easy migration story.
No, there's no such thing.
In hundreds of these things. You've been around a long time in the industry.
Who said that?
Some guy called
Andy
James. Do you truly believe that the fundamentals of operating a portal has changed very much?
I don't think what was fundamentally important has changed. Those fundamentals still exist. I think the way you run them, technology's made running our businesses easier. So we probably have fewer people, comparatively speaking, than we might have had, 15 years ago. So I think that the way you go about it, but I think the fundamentals of the things you've got to get right are still fairly the same, which is interesting because, as I said earlier, there's been literally billions of dollars thrown at trying to crack this code around more money from the industry, and here we are, still trying to figure it out 20 years later. If you compare property to a lot of other things we buy or sell online, property's been really sluggish and a laggard. It hasn't actually changed heaps. The way we sort of find it and search for it and research it, purchasing process probably hasn't changed that much.
How do you choose the markets that you're operating in? And should we expect new markets from you?
When we started out, we started with a list of about 90 markets. We whittled it down to 52. We then had a priority list of 37. And this is getting washed through different data points, everything from macro factors down to local factors. Today we're in 20 markets, I think. And so that means there's probably another dozen or 15 that we would normally just look at. But I would say if you look at our footprint in LATAM, for example, we're not in Brazil, Mexico, or Argentina, but we're everywhere else. So we don't do big competitive markets. In Asia, we've been in Vietnam, Philippines, and others. We don't do China, India. So we steer away from those expensive, big competitive markets.
There have been markets that you have been in and you've exited?
Yep.
Why?
So we were in Vietnam with the business, and we liked it to begin with, on a no-names basis.
And then you didn't like it?
Well, we did like the business. We kind of got a bit lost on the ambition that the founder had.
Right.
So we exited, and that business closed down this year. So we exited a couple of years ago.
Okay.
But generally, it's either a mismatch on ambition or if we can't see scale, and our portfolio now, half of our businesses are doing 10 million or more. So that's our pass mark now. 5 years ago, it was $1 million in revenue. Today, it's probably closer to 10 in terms of where we want to put our focus.
Right.
And you can't be everywhere. And we've lived through shared experiences of trying to do a lot of things in different places, and you figure out that you're probably better focusing on fewer things that are bigger and more scalable.
Yeah. Which is interesting because then it's like, why did you take the majority or 100% ownership and not just keep the 30%? So why?
So it's a
buy
good
out
question.
some of these businesses?
So what tends to happen is entrepreneur starts business, gets it out of the garage. We come in, we invest. It grows. You can see that it's starting to reach this interesting inflection point around value and growth. And if you're a rational person, you want to get the benefit of that value creation that is imminent. So it's normally a good time to say, hey, we wouldn't mind buying some more because we want to capture the economic value of what we're about to build.
So you share in the way I think about it is you share in the pain of getting to scale.
Yeah.
And then two things occur. One is you can fund the upside because you can help accelerate the growth of the business.
And we can help.
but also I think there's a lot of founders who can't take it there because their skill set runs out.
Inevitably, and founders at some point get bored and they want to go do something else,
Yep.
and that's okay.
Okay. Now, the question at the top, what are you thinking of your classifieds entering transaction businesses? Do investors view it as being a risky move? 50%, this is the difference between the 50% plus model, what Malcolm was talking about, right? You've got these models at one end, 50% EBITDA, 40, 30% EBITDA, and 3 to 5 at the other end.
Yeah, so our investors are already, they're okay with risk.
Yes.
They're investing in emerging markets. So when we say that our vision is a classifieds business augmented by transactions revenues, when you look at the economics and the addressable market, so by way of example, most of our markets, it's something like for every $1 in advertising, there's about 15 in commission. So 15 to 1, let's say. You don't have to keep talking once you get that data point really clear in people's minds. And what we were talking last night about was just the relative value of, if we looked at ad revenue on a per lead basis, and then you look at transaction revenue per transaction as a percentage of it, it's so compelling. So yes, there's risk, but the economics make it so compelling that it's an acceptable risk, and people want to pursue that opportunity.
Okay. Last question. I'm not going to take James's one at the end, but I'll take the top one. What are the biggest common themes across LATAM and Southeast Asia? What are successes in LATAM that you see as opportunities in Southeast Asia?
So what's working in LATAM might work in Asia? Is that the crux of it?
Yeah, I think there's two. There's common themes between the two.
Yep.
They're both emerging markets, right?
Yeah.
Are there any common themes, and are there any opportunities to look at companies in LATAM that, to learn from them to apply to this market?
Somewhat so. The beauty of LATAM is it's the only region, forget about Brazil, contradict myself, it's the only region where there's one language that goes across multiple markets. It's actually a really good region to be in multiple markets because it's the interoperability of different businesses is easier, and that doesn't happen in Asia. There's no two markets that kind of work the same. What we are learning in LATAM is LATAM are interesting markets because you have relatively high GDP in emerging market sense, but the markets themselves are quite unregulated and messy. So it actually structurally suits a portal, formalizing the market and then helping with transactions. High GDP, messy market. Asia's GDP is a little more all over the place, but the markets are equally messy. So what we've found in LATAM is that we're able to use tech because the markets are relatively sophisticated, and you can pursue transactions like Infocast has with tech. In Asia, we've found that the transactions have been a lot of boots on the ground, and a little more crude in that sense, but the outcomes are similar.
Okay. Shaun, thank you very much.
Can I just say one thing before we go? And hope it's not controversial. I've been going to these conferences for, San Francisco, 2009?
2009, yes.
So a lot. And the beauty of these conferences is you see familiar faces and you get to know folks. And up until recently, we've had always a really strong contingent from Ukraine.
Yes.
Ivo Pertz, the guys from Homesters, the RIA group who we got to know.
Yep, VRNet's here as well.
Yeah, so I just want to give a shout out to the Ukraine guys and hope that all is well. I know chatting to the guys from Homesters, their team is, I think, Dimitri, you mentioned the team in Kiev's had to sort of reinvent itself, and I chatted to Ivo Pertz a while back. He obviously had to leave the country. So just wanted to say, hope we see all you guys back real soon, and you keep up the good work.
Okay. Anyway,
thanks.
Thank you, Shaun, and thank you, everyone.